Over 1.5 million is our bullish case. Our starting point is at $650,000, so by 2030 we expect to have grown by a factor of 10. Additionally, there are three major components. This group consists of the decision makers of large financial institutions like B of A, Merrill Lynch, etc. Sounds like retail distribution. Okay, there you have it. The second is that it can be used in place of gold. We therefore anticipate that it will absorb half of the target at the gold market, particularly given the desire of younger generations to diversify their holdings. Also, Bitcoin's popularity and growth will skyrocket. She predicts that Bitcoin will seize half of the gold market and that it will have a major impact on the precious metal. Her research shows that younger investors are shifting their money away from more traditional assets like gold and toward Bitcoin, so she makes this prediction based on that trend. In her optimistic forecast, Wood predicts that Bitcoin's price would surpass $1.5 million by 2030, with a possible peak of $3.8 million. Meanwhile, Bitwise CIO Matt Haugen predicts that Bitcoin's value will surge to $100,000 by year's end, according to an article. According to Haugen, long-term investors have a once-in-a-lifetime chance to capitalize on the present market conditions. In a recent note, he laid out a number of reasons why Bitcoin's value could reach $100,000 by the end of 2024. These include, among other things, heavy investments into Bitcoin ETFs, the effects of the recent Bitcoin halving, and the expected approval of an Ethereum ETF by the SEC. The future of Bitcoin's growth appears bright in light of these positive predictions from prominent market analysts. To further explore Cathie Wood's views and predictions, let's examine some excerpts from her interview. Among ARK's 4 crypto experts, one is focusing solely on Bitcoin's chain analytics. We are halfway through this bull market, but it doesn't mean prices will continue to rise at their current rate. In fact, when bull markets expire, prices often skyrocket. So we don't know where it is, but we are extremely confident just based on chain analytics that we are halfway through the bull market when we compare them to the brief 10-year history and a little bit beyond. What's fascinating is that many people assume, oh great, the boom, because the ETFs were introduced in January. And our performance, like David's against Goliath, has been excellent. We are content with our current position in the war. However, as of this writing, not a single major financial institution, what we refer to as a wirehouse such as Morgan Stanley, UBS, Wells Fargo, Bank of America, or Merrill Lynch has added Bitcoin, a Bitcoin ETF, to its platform. Every one of them is making every effort. Even though it might not be one of the major ones, I predict that an independent RIA like LPL, which is known to operate at a somewhat faster pace, will do it within the next several months. Everyone else will quickly follow suit once you have one that supports a spot Bitcoin ETF on its platform. Over 1.5 million is our bullish case. Our starting point is at $650,000, so by 2030 we expect to have grown by a factor of 10. Additionally, there are 3 major components. One is institutional, and I'd place the other. The decision makers at B of A, Merrill Lynch, and similar institutions are involved, yet it seems like retail distribution. All right, I see. The second is that it can be used in place of gold. Because of this, we anticipate that it will absorb half of the gold market, particularly among the younger generation that is seeking diversification. In addition, it serves as a policy of insurance. As an example of a growing market, I recently had the opportunity of meeting with top authorities in El Salvador who are leading the way by legalizing the currency and either giving their population it or paving the path for other nations to do the same. What a cunning plan. I think it's a fantastic decision. What a cunning plan. In addition to my buddy and mentor, Art Laffer, who accompanied me on my journey, I anticipate collaborating with that administration. There is just an economy worth $30 billion. Do you think that's true? Truly, that is unbelievable. Here we are discussing something that they are actively pursuing. They are being really innovative. New tax policies are being implemented with the intention of fostering innovation. In my opinion, that is a profound concept. Give that some thought. 30 billion Salvadorans, the whole nation. This is the path that Argentina is taking. We have spoken with the economic ministers there. They aren't quite prepared to follow President Buchel's lead on Bitcoin just yet, but they are making strides in that direction. It's on their minds. The second kind of insurance covers everybody, not just those with a lot of money. In the event that their wealth is seized, whether by inflation or by corrupt officials, the fact that Bitcoin has become an issue in this election year and has secretly made its way into the hands of 50 to 60 million Americans is fascinating. Actually, it's the crux of the election for a lot of people. That is the reason behind the 21st Century Financial Innovation and Technology Act. As a result, 76 Democrats joined Fit 21. The Republicans basically made this an election year issue when they started accepting cryptocurrency donations and promised to protect the right to self-custody, among other things. It's quite significant. Bitcoin considers such a major development. We remain strongly aligned, despite the fact that our ETF potentially serve as a vector for centralization. Both are true in our opinion. The function of a spot Bitcoin ETF is twofold. First, to provide self-custody for early adopters and ecosystem experts. Second, to educate the public about what this is and the strength of this movement. Reason being, you'll want to know all there is to know about spot Bitcoin ETFs after you own them. You should familiarize yourself with the return profile and risk profile. Yeah, we usually don't do it all in 1 year, but if the market is already in a bullish phase, I predict that platforms adding the spot Bitcoin ETF will be the next catalyst. Because of it, I am certain that it will transpire this year. Some of our potential customers, the platforms themselves, informed us that they would require 6 to 9 months to assess it. We are already halfway through the 6-month period. In the autumn, I anticipate that at least one platform will offer a Bitcoin exchange-traded fund ETF, maybe even several. Then I'm thinking that will be the next desire. Actually, I find it quite intriguing. It was in the second half that I recall this. Everyone was expecting a pop when we went through the barrier, but it never came. To start, there was a lot of faith in it before it even happened. Thus, it didn't. Kind of wait about, and then suddenly, it would be quite exciting if those two events occurred simultaneously in the last 3 months of this year. I have no doubt that those platforms will accelerate there after just 1 hour of working with Mike Saylor. Okay, maybe not. They're just afraid of failure. As a result, we and they all want nothing to do with it. Mike does a fantastic job of evangelizing the place, but it's not safe. It has to adhere to certain standards. For example, I prefer to believe that our research, we have published multiple white papers beginning in 2015, reflects a systematic approach to studying the subject. On the other hand, there are people like Art Laffer, who is extremely enthusiastic about Bitcoin and truly believes that the Federal Reserve has effectively managed monetary policy throughout the years. Thus, we have successfully averted disaster. Prices were steady, we were still on the gold standard, and the economy was extremely unpredictable in 1913 before the Federal Reserve ever existed in comparison to what transpired after the Fed was established in 2000. The ups and downs you encountered were rapid, though. Within weeks, they had ended. We set the stage for a crash for years, with 2008 and 2009 serving as prime examples. Once again, we had interest rates of zero. Also, I'm curious about the consequences of using private equity and private credit to invest massive amounts of money in real estate and then leverage it. The consequences in terms of offices are becoming apparent, along with the office exodus following COVID. Even in places where migration has been heavy, the housing stock is multifamily. Consequently, there is an overabundance of multifamily housing in the Sunbelt. I guess we'll just have to wait and see. Situations of crisis, in my opinion. With any luck, it won't be 0.8 or 0.9. I don't believe so, although it's worth noting that staying at 0% for an extended duration can encourage undesirable behavior due to the pursuit of yield.